It's Friday, July 10th, and earnings season is going to start in about 4 days. I only have about an hour and a half before the market closes for the week, and I need to do my full analysis and I need to put in my orders before the market closes today. So, as many of you guys know, that I started with stock trading first about 10 years ago, and then about a year, 2 years after that, I found out about Forex, started trading Forex. So because I actively trade, I already have an understanding of what are the overlying themes or what is happening fundamentally. But in terms of actual rotation, all that stuff, sometimes I need to sit down and do a little bit more deeper research. I usually like to look at Forex Factory or Bloomberg and look at the articles, what's going on, and do the full analysis myself. But right now I'm short on time, so we're gonna take a shortcut, and I'll show you guys exactly why I do that. So I'm going to start off with TrendSpider. I'm going to start off with NASDAQ, take a look at what's happening here. So I know that NASDAQ has been getting a lot more volatility, a lot more volume in terms of investments. So just off of the daily time frame, I see that we are still sitting in a consolidation, but we closed up green today, or we're still pushing up green today. Then I'm going to look at what is happening with S&P 500. So I'm seeing a lot more bullish volume here. So overall, it seems like there's already some pre-positioning that's happening here. Now, the shortcut here is that I'm going to be using AI to do the analysis, but I'm going to use Sidekick with TrendSpider. So the reason why I like to use this instead of ChatGPT or Claude is because those AIs will pull information from the World Wide Web, basically the internet, and it's going to give you a consolidated version of everything that's out there. Now it's up to you to filter through that and figure out what is noise versus what is real data, what is real information that you want to use. The good thing about TrendSpider is that it doesn't pull information from the internet. It pulls information from its actual data providers, which is NYSE, NASDAQ, OPRA if you're trading options. So things like that. It's coming directly from the data providers, from the liquidity providers, from the exchanges themselves. So this is as real and clean and raw data that you can potentially get without paying, $20,000, $30,000, $50,000 for, like, let's say a Bloomberg terminal. So this is really good data point here, or just analysis that I get from Sidekick. Now here I have different personalities that I can choose. I like using Simon, but just to give you guys a quick understanding of what are the different personalities here. Simon is the data dude here. He's the numbers guy. I love using numbers too. I don't really care about long text paragraphs and things like that. He just likes to use, let's see here, tables, charts, numbers, and doesn't really care about the stories unless they're being told with the numbers. So it's more like a quant trader or quant investor. And then I also use neutral analyst sometimes, which is the closest to a financial advisor type of analyst or personality that you're going to get. But the rest, depending on whether you're a long-term investor or you want to trade more like Benjamin Graham or the Wall Street dominator, like the Wall Street bets type of behavior that happens, you can use any of these other ones. And same thing with Karen here. I like to just stick to these two. So for today, I'm going to be using the data dude because that's what I care about. I also pull up their knowledge base because this lets me know what type of information that I can look up in Sidekick as well. So sometimes if I forget, certain things to ask Sidekick, I just come over here, just take a look at what else I'm missing, and then just ask that. So I'm going to use Simon, the data dude, and my style of trading is fundamental analysis, market sentiment, and then we'll go into the technical side. I want to look at what is happening in the markets overall first, and then dive deeper into that, pick certain sectors, ETF stocks, things like that, and then look at, what do I want to trade? So the very first thing that I'm going to be doing here is I'm just going to ask it to give me a quick overview of the fundamentals and the market sentiment of what's going on in the market. So what I'm going to say is pull up institutional data, institutional buys, exits, insider trades, what else? SEC documents. What else can we ask? Let's see. Fundamental data here. I can get, deep into it, or I can just ask some general overview. Options activity, I want to look up. I'm going to look up any news. And I also want to look up macro events. that's pretty much it. Options data, macro, economic events. I want to look up also headlines that are impacting very specifically S&P 500, NASDAQ, and Dow Jones. And now it give me full fundamental analysis of what is happening in the market, capital rotation, institutional versus retail positioning. And very specifically, I'm doing this ahead of the earnings season. So I'm going to say going into the earnings season starting July. So this is usually stuff that I would be looking up myself. You know, any insider trades that are going on. That usually is the harder part for the retail side. And that's because, you know, sometimes we don't know what is noise and what is good information. What should we be paying attention to? How do you connect it to the overall market? So I'm just going to have, you know, Sidekick do that for me. And I'll show you guys how you can do it yourself too, especially within TrendSpider. But any options data that's going on, any unusual activities. And one thing that I forgot to ask, which I'll do probably in the next message, is it can pull dark pool volume as well. So I'm going to have it take a look at that and then give me a full fundamental analysis. And so the thing about using AI for market analysis, like I said, is that with ChatGPT or Claude, if I ask the same exact question to them, they're going to answer from their training data. They have a knowledge cutoff and they don't know what happened, you know, very specifically with ChatGPT in the market today, or what oil did this week, or what the FOMC minute said on Wednesday. With TrendSpider Sidekick, it's going to pull the data from the live exchange source data, and it has about 170 plus direct integrations from NASDAQ, NYSE, CME, OPRA. So when it answers this question, it's actually answering from what the market is actually doing right now, not, you know, what happened months ago. And I also don't have to feed it any articles either. So here, it just answered, and it seems like the dominant market driver right now is the US-Iran conflict. The ceasefire declared and Islamabad collapsed this week. Trump declared it over on July 8th and then signaled willingness to resume talks today on July 10th. So a lot of whipsawing that's happening in the markets. Market impact here. We had futures gap down, oil surged, crude oil Brent back above the $80 mark, and you can confirm this when you go over to you know, TradingView, or you can just pull up Brent oil right here on a TrendSpider as well. We had some military strikes and the market impact. Let's see, oil volatility is what we got. We got futures dipping as uncertainty persists. And then we see with the Fed and Kevin Warsh's era, no forward guidance, inflation called too high. Let's see if there's anything else very specifically here. In the last 10 days, it's going to give me the macro data points too. In terms of capital rotation, so this is the most important structural theme right now. Key rotation signals from 13F data. So this is institutional data points that you can pull up here. So instead of going to Sidekick, let's say if you don't want to use that, but if you're just exploring TrendSpider here, I can just come down here. This is all institutional 13F trades. So this is everything that these funds have already filed with the SEC on their investments. So these are all the funds and which symbols that they're investing or, you know, pulling out of. So sell, buy, I can pull up all the information for today. And clearly we see one very clear name, two clear names here with major investments. But I'm just going to have Sidekick tell me all of that instead. So here I see that, come here. With buying, we're seeing a lot more, about 1.2 billion worth of investment into NVIDIA. Another 617 million investment into Taiwan Semiconductor Manufacturing Company. I also see Pan W. I also see SanDisk, about 1.4 billion worth of investment there. A lot of selling right here as well. And it's very specifically from these funds here, which are the bigger players. Of course, there's other funds who are constantly buying and selling, but these are the bigger ones. And then here, Ocean Park is a high yield bond ETF specialist, and they have poured about 1.4 billion into high yield bond ETFs. So these are the very specific ETFs. So this is a notable institutional risk off rotation into fixed income here that's happening. So that's just one. And then let's see here. Institutions are trimming Mag 7 semis and rotating into healthcare, defense, utilities, and income products. We will ask Sidekick some more questions just to get a little bit deeper and really figure out which are the specific sectors that I really want to be paying attention to. Overwhelming theme here is that we're seeing a lot of insiders selling, a lot of non-scheduled looking sells here too. So we had Walmart, the Walton family holding, selling about 535 million. And we have Broadcom, the director, selling about 250 million worth here. Rocket Lab, also a lot of sales from the CEO in the last 3 days. Nvidia. So it seems like it's a lot more profit taking also that's happening with CEOs and directors selling at elevated pace. Rocket Lab sold aggressively across 3 consecutive days. And then a rare buy with 24 million combined worth. All right, let's continue down with options data here as well. Just giving the summary. Basically, short-term options skewing bearish into earnings season. Longer dated calls suggest some bulls remain, but the dominant flow this week is put buying hedging. With NASDAQ 680 October put is particularly notable. That's a 6% downside hedge that the market is preparing for to going into next week. Retail activity in NASDAQ peaked in early June and has been falling since. Retail is stepping back from tech. Dow Jones retail sentiment notably positive, consistent with Dow hitting records in the rotation to blue chips. With dark pool data that's going on here, we're seeing the S&P 500 dark pool surge to about 120.6 million week of June 1st versus the 88 to 120 or 102 million, prior weeks. Elevated institutional positioning. NASDAQ dark pool also spiked to about 103.1 million versus the 54 to 84 million range. Institutions were actively repositioning in June. And then earnings season kick off here. We're starting off with JP Morgan. Right after that, it's going to be Goldman Sachs. And then we have Wells Fargo. We have Citigroup, Bank of America, Morgan Stanley. We have BlackRock, Johnson & Johnson after that. So banks are leading. Let's see here. What to watch for: trading revenue upside for banks, possible NIM compression commentary, and insurance reserve warnings. So what the data is basically saying here is that these are the signals, the main things that are happening in the markets and the data points that we're looking at and everything like that. The market is entering earnings season with heavily institutional hedging, insider distribution, and macro backdrop defined by oil risk and Fed. Let's see here. So rotation is already happening. So now what we're going to do is pair this up with the market sentiment. So what I'm going to say is, let's see, what is the current market sentiment for S&P 500, Dow Jones, and NASDAQ going into earnings season starting July 14th. I'm going to have it include inflation context. It did a little bit here, but go a little bit deeper. Any Fed rate expectations. So the reason why this is important is because Fed rate expectations has a direct impact on banks and their profitability. A lot of people don't know that, or sometimes they get overlooked, but this is important to know as well. And any key divergences between sectors. So this will give me some, good information here as well. And if you guys are wondering, what are the sell and the short and volume retail? So I'm still not using indicators here. I still use pure price action. But basically, when I asked this question, I had the Texas Instrument stock pulled up here. So basically, the insider trades on the charts where we're seeing the sell and the gift here, and on certain stocks you must have seen buy. These are the clusters of buys near the lows. That is insiders or like CEOs, CFOs, directors, if they're buying up, a significant amount, or if they're selling a significant amount, or if there's like any gifts or awards, insider awards that tend to happen. If that's happening. So basically, are the people who are running that company, are they buying or selling their own stock? That will let me know, because that obviously, if there's a significant amount of sales that are happening by the executives, then you're going to see the stock price, dropping as well. And so we see a cluster of that, and then the stock price did drop. The red line here, that is the short volume. This is a FINRA reg short volume, raw number of shares that are sold per period. So about 1 to 2 million shares that were sold right up top here. So this is not short interest. This is just daily short flow. And so the spikes that are happening here, that will let me know, what's happening in the markets, what's happening with, any short volume. If there's a lot of short volume that's going on that day, that's what I need to be careful of. If my stock has moved a significant amount and I really don't want to hold on to it any longer, then I'll probably just use this information, pair it with what's happening fundamentally, what's happening in that sector, if there's anywhere else that I want to really move my profits from that, or if I just want to continue holding on. So these are not my indicators for buy or sell. These are just my additional information on what's happening, without really having to go and dig deep into every single stock and what's happening, with their insiders there. Then I have my retail activity percentage here, and that is what percent of all retail trading volume across the entire US market is focused on that specific stock on a given day here. So I see that briefly spiked at a certain point, which was right around here in late January. And then, if I look at it a little bit more closer, then it happened in June as well. And if there's, any significant activity from a retail perspective, then I'll take a look at what's the retail side doing, and then what are the institutions doing if there's a gap there. So we got our response from the other chat. Let's pull that up, and we see overall, all three indices, they're quite bullish here. We saw that NASDAQ was kind of the leader today. Let's continue down. We're seeing capital rotating out of tech and into financials, healthcare, and industrial. So we have now narrowed it down to 3 specific sectors, which is a classic pre-earnings rotation. They're positioned for the banks because they're starting off with the earnings season, and then away from stretched AI semi-valuations that got hit hard. Let's see if there's anything else. Dark pool institutional off exchange moves. We have a spike, which is institutional positioning that's happening with S&P 500. Let's close this. That answers why we're getting, a massive bullish run up here too, and continuing that push, and then positioning there. And then we also see NASDAQ, major institutional move into NASDAQ, near doubling. And then the retail side is selling, mildly net selling NASDAQ. So I don't want to be selling NASDAQ because, the institutions are buying it up. So that's how I'm going to position myself. I'm seeing net buying from the retail side into Dow Jones, which is fine because it is, capital rotation. And then mild buying with S&P 500, which pairs up with the institutional side. So I think we're good right there. But so far, it seems like the institutions have already loaded up in mid-June. Retail is being cautious on tech and NASDAQ. Let's see if there's anything else. So these are my options. What is what big money is hedging basically here. And then it gives me the exact dates, the puts, the number, the amount. Smart money is buying downside protection on NASDAQ very specifically. Hedging against the tech earnings disappointment. We know that earnings will be coming out from the tech side later into July. So they're already preparing for that. From the macro side, I have my Fed context here. So Fed's July report explicitly cited AI investment demand and Middle East war as dual inflation drivers. Rate cuts are not coming anytime soon. And here's my schedule for next week when it comes to earnings. Let's see. So the money has been flowing very specifically into financials, industrials, and healthcare. Tech is quite sensitive still to any earnings miss given the sentiment and heavy put positioning. Let's see. Okay, so we got that, which is really good information. So this is basically telling us that, what price action alone isn't going to tell us, which is where's conviction building up, especially on the short side and even on the buy side, and more importantly, where it's declining. So when we start to see that short volume here is starting to increase on certain sectors, then I want to make sure that I'm staying away from that too. So now what I'm going to do is do a little deep dive into specific sectors. And so what I'm going to tell Sidekick to do for me now is show me the current sector rotation into Q3 2026. And I'm going to say what sectors are seeing institutional inflows. And I can do this myself too if I just pull up what's happening now and I can just look at the institutional side inflows, and which I don't want to do all that. I have very short time. I have less than an hour and a half now to do the full analysis and put in my orders. And then I'm going to say, how does this connect to the calendar starting July 14th? So the rotation, very clearly now we're looking at all the data points. It's giving me the big picture. The rotation is already built up, the entire year. So Dow has been up almost 9% in the first half. Russell 2000 was up about 22%, which is the first best half that we have seen since 1991, right? And those numbers, obviously, they're not happening by accident or anything like that. That's actual institutionals moving out of the 40x earnings, mega cap names, and into industrials, financials, healthcare, companies that have been completely overlooked while everyone else has been chasing AI. So another thing that, to note, and, you can look up that on Sidekick as well, but one thing that I have been catching on to just looking at how the market is behaving is that the AI infrastructure build out itself is driving money into materials, energy, and utility. So this is something that most retail traders and investors probably completely miss. And these are the companies that are building the data centers, the power grids, the cooling systems. So that looks like, a Dow stock, not a NASDAQ stock. And that AI trade has winners, hiding inside it that have nothing to do with the chips itself. All right, so we got our response here. We have our sector performance, and it seems like XLK is the ETF for tech. So we're seeing that has, the best performance so far. Institutional flow direction. So matter of fact, if you wanted to look at that yourself, come down here. So that is the institutional trades right there. Institutional buys above $5 million worth. And if you want, you can go through all of that. I don't want to do that. And also you have your institutional exiting. So institutional investors selling big, all the stock that they had. I don't want to look at all of that. You can do it, if you have time. I don't have time right now to do all of that. And so I see that right now. The rotation summary seems to be, this is my technology sector ETF here. And I am seeing a strong inflow with AI semis leading. Confirm that with the charts here. So I got my daily. I also have my weekly with a nice little flow. So this is the pre-positioning, right? So from a price action perspective, we also do not have the retail side jumping in just yet, but you're already seeing the pre-positioning that's happening there. And then we have healthcare, which is stealth accumulation that's going on here with XLV, which is my healthcare ETF here. Materials, institutions buying the dip at the moment. So let's pull up the chart for this. On the weekly, it looks like just consolidation. And then on the daily, seems like we're holding on to a support, trying to push back up, but still sitting within that consolidation. So consolidation on the price action, and then this telling you that the institutions are accumulating. That clearly tells you that within consolidation, there's a lot of orders that are being accumulated here. And then you have your XLU, that's your utilities, defensive positioning, that's rising here. Financials, we're starting to see that we're getting pre-earnings accumulation that's going on. So X, we're starting to see a push. And on the weekly as well, breaking previous highs, currently sitting at almost previous highs or a little bit just above it too. So we have that. And then is there anything else? But we're getting clear institutional outflow from the energy sector, it seems like. So the key divergences that we're going to be watching out for is XLC, which is your communication services ETF. Price is down 2.1% since April, while dark pool volume surged about 50%. So that's your classic stealth accumulation divergence here, which means that the institutions are quietly buying while price is still suppressed. That's one thing that I want to be looking into. So that's going to be on my list. And then let's see. So the catalyst, it seems like it could be Netflix and Google. And then we also have XLV, which is your healthcare, and the dark pool is up 96%, which is the largest relative surge of any sector. So that's another thing that I want to be looking into as well, and potentially looking to reposition into a bit more. And so let's see. Key earnings for this is going to be Johnson & Johnson, United Health, ABT here as well. So all of these. So dark pool growth here for tech seems to be a little bit more modest at 41%. Institutional money moved early April to May, price followed. And then I want to be out of exit energy as well, the clearest institutional exit here. Let's continue down. So it doesn't seem like the dark pool data is really telling us too much about XLF, but there's obviously some pre-positioning that's going on here. So the rotation into quarter 3 2026 is tech-led on price, healthcare-led on institutional stealth accumulation, financial heavy on near-term earnings risk. And the most interesting divergence is XLC. We just looked at that, which was the communication services. Okay, so the next thing now after this is I wanted to look at what's happening in terms of insider trades. Like I said, insider trades tends to be a little bit more confusing for the retail side, but what I'm going to say is pull up insider trade activity for the week. And very specifically, I'm going to say look specifically at what sectors are seeing concentrated buying. But what I'm going to do is now pair that up with the rest of the analysis that we have so far and just dig a little bit deeper. And like I said, insider traders or trades tend to be one of the most underused data points in retail trading. And it's not because the data is hard to find, but it's because most traders don't know how to read it in context of the bigger picture. And a single insider sale, it means nothing. Insiders sell for hundreds of different reasons. It could be for tax planning, it could be for diversification, it could be personal liquidity. So one sale here is really just noise. What matters is what's the pattern that we're seeing here repeatedly, and cluster buying by multiple insiders in the same sector over, let's say, a short window in like a week, maybe 2 weeks, 3 weeks. That's a signal. So they're not coordinating here. They're all independently seeing the same thing in their own businesses, and then they're acting on that. So look at what's happening in financials going to bank earnings next week. So that's what we're pairing up, right? Look at industrials, compare that to what's happening with mega cap tech. And the insider activity often will tell you what side of the trade has more conviction before the price action is going to make it obvious going into next week too. So we just got our response here, and we're seeing that Mission Produce is getting, let's come over here onto the daily for this. This is in the consumer staples and the food. Let's see, the director here, it has about 24.1 million over 3 days, aggressive consecutive accumulation. So we're seeing some buys here that are happening. And then same thing with another consumer staples, which is Energizer Holdings. The director here, Aqua Capital, bought up about 1.6 million over 2 days. And then we're seeing Energy, the CEO bought up about 968,000. And then with healthcare, same thing, we're seeing the insiders buying up, but very small amount. So we're seeing a lot more concentrated buying in consumer staples. And let's see here, a lot more selling happening with CrowdStrike, with the CEO, and then also with Cloudflare, a lot of the CEO, notable sellers, and then with Dell, Silver Lake, which is one of the bigger funds as well. And then the rest of these, about $60 million worth of volume is what we're seeing here. So that's exactly what this is telling us. So we're going to be expecting that price is going to be dropping here as we're seeing a lot more selling that's happening. And then we also see the space and industrials, which is Rocket Lab. The CEO also selling over 3 days. They sold about 286 million worth. And then RH. So the key takeaways here is consumer staples is the only sector with clear concentrated insider conviction buying. Let's see what else. Sell side extremely broad and heavy. Tech, space, financial, and healthcare insiders are all distributing. And no insider conviction on financials ahead of earnings. Okay, perfect. Now, another thing that I'm going to do is dig a little bit deeper and have it give me specific information when it comes to the earnings very specifically and a little bit more forward looking. So I'm going to ask it to give me the key fundamentals. What are the key fundamentals or fundamental risk? Let's be more clear. And opportunities for the major bank earnings reporting 2014 week. What else? We're specifically for, let's say, JP Morgan, Goldman Sachs, Citigroup, Wells Fargo. What else was there? Morgan Stanley, Bank of America. And I'm gonna say what should traders watch beyond the headlines. UPS leads. Actually, another thing that I'm gonna throw in there is it can give me what is most popular with retail investors. So I'm gonna have it give me that, and I'm gonna have it give me the divergence between that and the institutional side. Also look at social media sentiment / retail sentiment, specific stocks or sectors that are most popular with retail investors versus with institutional. Report back any divergences. If I can spell for the life of me today. Report back any divergences between retail versus institutional investing patterns, sectors, stocks, and pre-position. Is there anything else that we can potentially ask? I think that's pretty much it that I'm gonna ask it. So there's that. And I want to be very careful here. The overall retail picture is what I'm trying to get here. And I want to be careful in the sense that, because I'm in this space too. I'm a retail trader. I would be considered a retail trader. I teach retail traders. And I'm not saying that the retail side doesn't really know how to do the analysis or really understand the market. It's just that retail side tends to be a little bit more late, right? And retail currently is concentrated in certain sectors, as we can already see, compared to how the institutional side is already positioned, or they're positioning right now. And so we want to be a little bit more careful in terms of that. They're a little bit more concentrated in sectors that the institutional money had already been building for months at this point, right? And the retail sentiment in those sectors where the retail or the institutional side already is either flat or it's negative. So that's kind of the divergence and that I'm looking at, and I want to dig a little bit deeper into. And historically, when you have that level of gap between where retail is positioned and where institutions are building, then you'll start to see that over time that gap is going to start to close out, because it's not because the retail side is right. It closes because institutional accumulation eventually drives price, and then the retail side is going to jump into that price and it's going to try to follow that price. And by the time the retail gets in, then the institutions are already out. So I'm not trying to be ahead of every move. I'm just trying not to be the last one in it. And a really good example of that is going to be, if you guys look up, most recent Bank of America's article that came out, and it was about the research side, the head of the research side, and then the head of the equity or the wealth management side. Both of the heads, they're telling you, that the market or the institutions, they're already positioned to see a bigger downside when it comes to certain ETFs, when it comes to certain indices, where specifically actually they talk about S&P 500. And the technical head, or the research head, he gives out the exact price levels for S&P 500 that they're watching out for. And he very clearly says that there is going to be a bullish push up, but that's going to be an institutional bullish trap. And then the research or the wealth management side, they're telling their institutional clients to basically get out or start hedging or start diversifying. So it's pretty much out there for you. You're getting the real signals, so to speak, from the Bank of America heads themselves. And I'm pretty sure there's a lot of other banks out there who are publishing the same exact thing or giving the same exact advice to their clients. So that's type of information that I'm trying to look at here. So here, what I'm seeing is, let's come up. So what to watch beyond the earnings per share headline. So the real variable to watch for JP Morgan is going to be the net interest income ex markets versus the 95 billion, full year guide reserve build decision. Key risk here is going to be the deferred downside scenario waiting from Q1 to Q2 may force a build. The key opportunity is IB reacceleration, which is the investment banking, and then also 40 billion excess capital optionality here. With Goldman Sachs, we are looking at investment banking revenue versus Q1 run late, private credit fund redemptions here. And then we have a key risk, key opportunity for all of them. So let's just continue down here and take a look at what else. This is where it gets interesting, where we have with JP Morgan, retail activity in this stock here accounts for about 0.14 to 0.2%. And then net selling the stock here. Let's pull this up. So we just had a gift. We're still pushing back up bullish here on the daily time frame, but it seems like the retail side is selling JP Morgan ahead of the earnings. Let's come up. Bank of America, heaviest net selling that's going on here from the retail side. Goldman Sachs, not too much. So it seems like retail is net selling every single bank ahead of earnings. But retail on the sector ETF is the opposite. They're buying financials broadly via the ETF while selling individual large cap bank names, which is your classic divergence, where the retail is rotating into sector exposure via ETFs while avoiding individual earnings risk, and they want the sector, not the binary event. And then the 13F is 13F is basically the funds that have to report what they're buying, what they're selling, and all that stuff to the SEC. So that's what we're seeing here. where we are seeing a lot more dark pool activity here as well. So Bank of America dark pool volume is high relative to its peers. Institutional position ahead of earnings is more concentrated here than anywhere else in the group. So I have one very specific stock that I want to be looking into as well. Any options pre-positioning, that's also happening here with Goldman Sachs. We're seeing strongly bullish. Bearish hedge versus near term for Goldman Sachs also here. And then Wells Fargo, it's kind of split. So these are the very specific contracts. So it seems like the most active one right now is going to be Goldman Sachs options are the most active and structurally bullish. Let's continue down. Retail names versus institutional pre-positioning. So retail is net selling NVIDIA, Tesla, and Apple, while institutions are heavily pre-positioning into financials. Retail is actually net buying SoFi Technologies. What else? So it seems like institutions are pre-positioning into financials at scale. JP Morgan, Goldman Sachs, and Bank of America, while retail is buying the sector via XLF, but avoiding individual bank earnings. Bank of America and Wells Fargo have the strongest institutional inflow signals. Goldman Sachs options are the most aggressively bullish. And retail is exiting out of tech with NVIDIA, Tesla, and Apple and rotating into defensives. And that's pretty much it. So that's pretty much it that I'm looking at. So banks, they're going to be reporting in 4 days. And this is where I think that the most interesting setups are heading into Q3. And I'm not trying to make a specific call here, but because the conditions are actually favorable, it seems like for financials in a hawkish rate environment, and nobody really seems to be talking about it. When rates stay high or they go higher, which is what 63% September rate hike probability is telling us at the moment, then the bank net interest margins also tend to improve. So that's the spread between what they earn on loans and what they pay on deposits. Higher rates expand that spread. The market already has been so focused on what higher rates do to growth stocks that it's overlooked what it does for bank profitability, right? So that the number that I'll be watching is not the headline EPS here. It's going to be the NIM guidance for the second half of the year. So that's the overall summary that I'm looking at. That's my full analysis. I have about 45 minutes to go ahead and start putting in my orders. I've done my full analysis. I know exactly what I'm looking at, which sectors to avoid, what stocks to avoid from the retail side, where the flow is actually happening, the options that are happening bullish for certain sectors and what stocks. So those are the type of stuff that I want to be looking at. And so it seems like, earnings season is going to start on Monday, but we're getting a rotation out of narrow mega cap tech and into the broader market that's already been building all year. So it's going to be banks first, then we'll get big tech, then NVIDIA. And the question that the market is simply going to be answering over the next 3 weeks is whether the AI spend is actually converting into revenue or whether we're just paying for a story that hasn't really delivered the numbers yet, right? And so that is going to be the most important answer for all the sectors for the entire market. I'm not making any specific buy or sell recommendations. This is just how I read the market. This is the data that I use to build my bias. And this is the framework that I apply whether I'm trading Forex, futures, equities, commodities, crypto, whatever. The same method across every single asset class. So I will see you guys for the weekly outlook next week. But the TrendSpider link is going to be in the bio. I'll drop my link there as well for you guys. We're just education partners here. The platform that I use every single morning before the session opens up, it's right here, especially when I don't have time. So I'll see you guys at the open next week.